Hi, this is Lara at Elliott Wave Stock Market with your weekly US oil analysis done after market close for Tuesday the 16th of July. I'm recording this video now. It's Wednesday the 17th of July, 3:35 in the morning New York time. I'm going to have a quick look at my monthly chart. My main monthly wave count sees oil in a big supercycle degree second wave zigzag with cycle A complete, cycle B a deep complete zigzag correction, and cycle wave C beginning here and starting off with a couple of overlapping first and second waves with primary 1 and 2 complete, and within primary 3 intermediate 1 and almost intermediate 2 complete. When third waves are extended, this is how they necessarily begin, and it's a really common situation to see a series of overlapping first and second waves before we start to see a really strong third wave down. This main monthly wave count would be confirmed with movement below 77.29. At that stage, I'll calculate a long-term target for supercycle wave 2 to end. Intermediate 2 may not move beyond the start of intermediate 1. Movement above 110.56 would invalidate this wave count. At that stage, I'd consider this possible alternate. Still seeing a supercycle zigzag for a second wave. The A wave's the same, but the B wave here could be unfolding as a double zigzag structure. The first zigzag and the double, labelled primary W, is complete. The two zigzags in the double would be joined by a triangle, a three wave, considered a 3, a triangle for an X wave at primary degree, and this is where the second zigzag in the double would start, labelled primary wave Y. So if we see movement above 110.56, we'll expect choppy overlapping upwards movement comfortably to new highs above this point, because that's the purpose of double zigzags, to deepen a correction for a few months yet. So that's an important price point, this invalidation confirmation point. Let's have a look, go back to the main monthly chart. Let's have a look at the second wave correction on the daily chart, with a low of minor wave B within intermediate wave 2 zigzag. Is this point down here, and this B wave subdivides quite nicely as a triangle, nicely explaining all this extremely choppy overlapping sideways movement of the last several months. This is where minor wave C begins, and so far it looks quite likely to be unfolding as an impulse, with minute 1 and 2 complete, minute 3 now complete, $1.86 above my short-term target zone from last week's analysis, and the very small narrow channel I had drawn on the hourly chart that contained minute wave 3 is clearly breached with the last few days, sideways and lower movement. This is minute wave 4 unfolding. When it's over in another day or so, I'll expect upwards movement, most likely to make new highs above the end of the third wave to avoid a truncation. When I know where minute wave 4 has ended, I will use minute wave degree to calculate a target upwards for minor wave C and intermediate wave 2 to finally end. And as on the monthly chart, 2 can't move beyond the start of 1, movement above 110.56 would invalidate this wave count at the monthly chart level, and that would indicate quite a lot more upwards movement ahead. Minute wave 4 may not move into minute wave 1 price territory. Movement below 99.21 at this stage at the daily chart level would invalidate this wave count. We can draw a channel now around minor wave C using Elliott's first technique. Draw the first trend line from the high of minute 1 to minute 3. Place a parallel copy on the low of minute 2. I should probably place a midline in this channel because I actually expect that may be where minute wave 4 ends. But if it breaks through the small channel on the hourly chart, look out for price to find support at the lower edge of this channel here I've drawn on the daily chart. But to be honest, the channel on the hourly chart's probably going to be a better guide for where this little fourth wave ends. I don't think it will get down as low as this trend line. So let's have a look at what happened in the last week on the hourly chart, where the end of minute wave 3 up here is this point up here. So price did move higher, $1.86, I think, above my small 3-cent target zone before turning down and breaching that channel I had drawn on last week's hourly chart. So far we've got what looks best as a 3-wave structure to the downside here. So minuet wave A subdivides as a 3, indicating either a triangle or most likely a flat unfolding for minute wave 4. This upwards movement, quite complicated, looks best as a double zigzag, and the Y wave has moved comfortably beyond the end of subminuet wave W, achieving the purpose of a double zigzag, which is to deepen the correction when the first zigzag hasn't moved deep enough. Minuet wave B here is a 91% correction of minuet wave A, just a bit longer than that minimum requirement of 90% for a B wave within a flat, making me consider this is most likely a flat correction unfolding, although we could possibly still see a triangle, but that's less likely. This wave count expects downwards movement for minuet wave C to subdivide as a 5-wave structure, and look out for it to find support at the lower edge of this little channel drawn around this regular flat using Elliott's technique for a correction. Draw the first trend line from the start of the A wave to the end of the B wave, place a parallel copy on the end of the A wave. If price finds support around this point, then minute wave 4 in its entirety would be a very shallow 23.6% or 0.236 Fibonacci ratio of minute wave 3, which is at 103.72. At 104.03, minuet wave C would reach equality in length with minuet wave A, so we have a small target zone for some more downwards movement. When we see a new high above this point, then we can be confident that minute wave 4 in its entirety would be over, and the next movement, the final fifth wave up, should then be underway. Also, when we see movement above this small channel around minute wave 4, a clear breach of this channel to the upside, at that stage minute wave 4 should be over, and minute wave 5, the final fifth wave, should then be underway. So overall for the next week for oil, I'm expecting a bit more downwards movement to bounce off this trend line here, and then probably new highs above this point here. It may actually be that the final fifth wave is actually quite quick. It may be quite brief because there's not a lot of room left for upwards movement. So I may not be able to calculate that target for you before next week's analysis. It's possible it could all be over by that stage. We'll see how this one unfolds. So I expect we're getting really close to the end of a big second wave correction at intermediate degree for oil. It's not done yet, the structure's incomplete, a little bit of downwards movement, and then probably some new highs before it's all done. That invalidation point, 110.56, is pretty close by. If that's breached, that's going to be extremely significant. I'll be then expecting a lot more upwards movement from oil. If price does not move above that invalidation point, I'll be expecting the probability of a strong third wave down will be really high. We'll see how this one unfolds. The next couple of weeks is going to be really interesting for oil. That's all for me today with your oil analysis, and I hope that everyone had a fabulous week.